banking space, that surprising spike that we saw in bad loans, which dented Axis Bank's profitability in the recently announced first quarter numbers that the bank had attributed to a technical impact, now we've been given to understand was not entirely a proactive move by Axis. Our sources indicate that it followed a regulatory intervention from the Reserve Bank of India, which had raised some red flags about Axis Bank's asset classification practices during a supervisory review sometime in the January-March quarter this year. Now, our sources say RBI found that the bank's NPA recognition policy was too lenient. Now, while they remain compliant with the income recognition and asset classification norms on paper, we understand that RBI felt the bank's internal policies were not aligned when it comes to the spirit of the regulation, and they were only doing the bare minimum in some cases. That was leading to delays in recognition of stress or even under recognition of stress, particularly in segments like unsecured retail and small business loans. Therefore, in response to this nudge from RBI, Axis Bank revised its internal framework, which then led to that 614 crore hit on the bottom line, the additional 2,700 crores in gross slippages and 820 crores in provisions because of the technical impact. Now, on its part, Axis Bank had called the move a prudent application of enhanced qualitative criteria, which was aimed at making the balance sheet more resilient. But importantly, keep in mind, though Axis Bank's NPA recognition framework was seen as falling short of regulatory expectations, our sources have made it amply clear that this should not be compared to the IndusInd Bank case, where major accounting lapses had come to light. In the case of Axis Bank, the issue was only policy interpretation and not financial misreporting. All right.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.